Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, January 20th. Okay, let's get started. It's 7:40 as I'm starting the video. The NASDAQ futures are picking up right where they left off yesterday, up about 0.8%. We've got oil up 1.25%, and we've got SPY, ES futures, just barely green, mostly flat line, and small cap futures, RTY, down just a tenth or something like that, mostly flat. So also, for those of you that are new to the channel or not subscribers to my content, I posted a blog already this morning with 9 trade ideas on trades about to happen. If you want to check that out later, please visit the website, and also just look over in the show notes. You'll find a place to register for all my content, and you would already have that in your email box if you had signed up. So it's a nice convenience. Keeps you in the loop. You'll get everything that I publish in near real time. So please do that if you're new. That would be great. So let's get into SPY. We came down out of this balance area. That had me concerned Friday and heading into Tuesday. I was concerned about if there was going to be downside selling pressure. They reversed it and kicked it right back up into the balance area. And now, pre-market, we are up flirting around with this 381 level, maybe a little bit less. But whenever you fall out of balance, then come back into balance, your instantaneous thought from a technical posture is my target is the top of the prior range, back into the box, if you will. So our target today, just on a technical basis, is a tag of the top of the prior range at 381. And then if we break out from there, if this PPO curls and goes higher, then we've got an opportunity to get long against 381 and then have all this area here be support for us. So if you had gotten long in here, or anytime prior to today, yesterday or Friday, and you're still long, and then we break out above 381, great place to move your stops up, buy more time, set your stop below 381, and then just stay long against that level. Bullish price action. When you drop out, then recover, that's a bullish move. Here it is on the 30-minute chart, expanded. We came down here and tagged this level at 374, which held. And we've gotten a nice bounce back up into the range. And like I said before, the target is this 381 level. A breakout from there would be a chance to buy and reset against 381. So this looks bullish so far. Now remember, depending on how we open, there's going to be a gap. However big or small, depending on where we open, there's going to be a gap below price, in here somewhere. So be ready for that technical move of, going lower to fill the gap, then reversing back up, once that gap is filled. So just be aware of that. Q's had a really nice day yesterday. Gapped higher off the open, and chopped around for several hours, quite a long time actually. And once it popped through and held this 314, then there was a nice move higher. Now, this morning, price is trading right around 319. So it's jumped this gap, created a new gap below. So for today, your toggle point is 319, which is the prior high. If price can gap higher, hold those gains and start building, you can be long against 319. If the faders come in and want to fade the open, you've got $2 of downside from 319 down to actually 2.5 down to yesterday's close at 316.40. That would be the gap fill lower. And if you caught that trade, I would be covering on the gap fill and consider then getting back to the long side, because this looks like bullish action here. We've got a bullish momentum cross here, and we've got RSI bottoming out on prior support and moving up above 50. So the Qs are set to go higher, with the caveat that we've got a $2.50 downside gap on the open. And here you've got the exploded look on the 30-minute chart. Now, yesterday, I want to point a couple things out. I actually thought that price would come down and fill this opening gap from 313 down to 312, and it didn't do that. We got an opening burst, then they faded it a little bit. They faded over the course of 2 hours, just chopping back and forth through this 314 and actually coming down at one point to test the top of the gap, which held. Then they reversed it. Then it may have been a hard trade to take, but the trade was on the break below 314, then the recapture of it. That was a buy signal on the recapture of that prior level, and then you got a really nice 250 move higher. So that was there were a couple trades of the day, but that was a nice one, the nicest one on the indexes. Of course, you don't know that when you're doing it, but you just can. All you can do is take the trades as they come, and then this is gravy when you got that impulsive move with no reversal candles to shake you out. Once you were in, after enduring this chop, if you were trying to do something here, you got frustrated, like me. That's what I was doing yesterday, chopping around in here. But then you got rewarded if you stuck through it and stuck with those principles of buying the recapture of the prior level. IWM. Just grinding within the channel. It dropped down. There's a little gap here. That gap has since filled, and the channel remains intact. No reason to get bearish here on small caps. They may not be the leader each and every day, because they've been the leader the whole time. Tech was leading yesterday, but still, price was up almost $3, and that's a good day. So stay long here, and if we take out that prior high up towards whatever it was, I don't have it marked, 214.5, and you bought down here at support, that would be a place to roll up your strikes and stops. Actually, it's closer to 215, breaking it out here. But what you really want to see is momentum turned decidedly higher because we've still got this bearish divergence in place. And to really get fully comfortable, you'd like to see that break out here and have momentum begin an upward path again. So prices in the channel, stay long, manage your stops and your strikes. I think your first cautionary development would be a break back below 212.50 in the bottom of this channel. Okay, let's look at FANG real quick. A lot of nice trades. Facebook, really nice day, almost 4%. Open down here, 251 or so. If you bought that, kudos to you. If you didn't buy it, this recapture here of 255 was your next objective buy level. You got the breakout from the downtrend line. That was another opportunity to buy. And then 260 was also an opportunity to buy. Most of the juice was gone by that point, but 260 is an important technical level to hold. So today, I would key off at 260. As long as 260 holds, I view this setup as bullish. If there's a check back to the downtrend line, which is always a possibility, that would be an objective buy as well. Or if it checks back, hold the line, wait for a recapture of 260, and then buy. If you weren't in, that would be a buy point. And you've got this nice gap up here to 267.60. That's another, let's just go off of 260. That's another $7 to the upside. To get this gap filled, that would be a great trade. So for me today, 260 is the key. Bullish above, cautious below. Apple did not really participate yesterday. I have made no changes to this chart since yesterday. To me, 128.50 is the key pivot point. If you get a break above that this morning, it's a level to buy, and you still got this open gap up to 132 that needs to get filled with the understanding that 131 has caused a problem. It was a problem here. It was a problem all through here. Couldn't really break out. So 131 is an intermediate line of resistance within this gap to be aware of. Tesla didn't do a whole lot, but went higher, recaptured this trend line, and walked up it all day. And my takeaway from this chart is you had a big drop in momentum, but price did not respond. It didn't go down and went sideways. And whenever you have a momentum reset with price going sideways, that's generally bullish, because now you get this reset with a bull PPO cross at 0, and you can see it starting to curl. That's a bullish move. And you've got RSI staying in its bullish regime above 50. This to me is a bullish setup, and I would be looking for places to get long if I'm actively trading Tesla. I think at some point, unless everything goes to hell, I think it's going to go up and touch the top of the range, fill this gap up to 880, and then there'll be a moment of truth whether price has the power to break out for the next leg higher, or if price needs to chop around further in the in this consolidation area. So I think, depending on how much room you want to give it, anything above 830 to me is bullish, and if it can hold 840, all the better. I think this is a bullish setup. Microsoft had a good day yesterday. At least it took out its downtrend resistance. It did back check and fill that opening gap. That was a great place to try a long. Taking out downtrend resistance was a buy level. But now, focus on 217.50. A break above 217.50. And this is where it's trading in the pre-market, right around this level. If it can hold that, it's bullish. You can be long against that level, and then look for a move to 219, and then a move to 220 to fill this gap, and then come up to this next overhead resistance level at 220. And if it can break out there, then 222, and then 226. If you see either a rejection at 217.50 or it start to roll over, then it would be an objective short against 217.50 if you want to try a bearish trade on this. But you got momentum rising, and you've got an RSI breakout. So I think in general, the setup is bullish here. It just depends on how far price can go, how much power and conviction are there with the bulls. Amazon. Nice little move yesterday, nothing dramatic. Closed on the weak side. This morning, price is right here at 31.50, and that's been a long-standing pivot point. So above is bullish, looking for 3,200. The free 50 club, $50 increments all the way. And then below, there's a gap to fill down to 31.20. So there's a $30 downside gap this morning, and that may be worth paying attention to on the downside if the powers that be want to fill that opening gap. Google. Nice move out of nowhere. Spent a little time down here on the open, but then your objective buy level, and we talked about this yesterday in the pre-market notes, the recapture of 1755, you got a fast $50 move, and that was great. Look how it came up to fill this unfilled gap. Once that was done, it backed off. I will take this gap off the board. So in pre-market, price is trading in and around this 1795, 1800 area. If it can hold there, no significant gaps to fill below. If it can hold 1795, 1800, you can look for 1815 and then 1835 on the upside at the prior high. If there's a pullback, I've laid out the fibs for this up move. If you get a pullback into 1770 or certainly 1755, which would be your halfback long, those would be locations I would look for reversals. So you may want to drop those fibs right onto your charts, or just use these levels The 38% fib is 1769, and the 50% fib, I'm just going to call it 1755 at the midpoint of the range. So those would be locations I would be looking to get long on any kind of pullback. Netflix was the talk of the town after the bell. Going to open with a big gap higher here above 560. This is the daily chart because now it's all about 560 because price has been in this $90 trading range since last July. So going on 7 months. Here's the opportunity for the breakout. If it can hold 560, your technical upside target is 650. Where do I get that? $90 trading range added to the breakout, 90 to 560 is 650. That's your technical target on a breakout, on a break and hold above 560. If in the days ahead, there's market weakness or, the powers that be want to fade Netflix, you've got a $60 downside gap to fill from 560 down to 500. So that's going to be a big opportunity if it does come. I think right now you've got to lean bullish after the move, but any move back into the range, back below 560, back into the $60 gap, you want to get short there with a stop just above 560 and play for that $60 downside gap. And my guess is if that happens, it's going to happen fast. It's going to happen really fast because anybody that would have bought after hours last night are going to back out of their positions because they'll know that they're wrong. So all those people would be sellers. So, and that's, if this, then that. If it stays above 560, you got to be bullish and look for follow through to the upside. If it drops back below 560, then that's a bearish move, and you want to get short if you're an active trader and try and capture a fast $60 move to the downside. Okay, we've got the inauguration today, so that will be dominating the news cycle. Let's see if big cap tech can have a follow-through day, if Netflix can hold its gains. Does that sentiment wash through the rest of technology and FANG to give them more power to the upside to finally shake this malaise that's been infecting big cap tech for the last 4 or 5 months, as they've all been in consolidation ranges with choppy trading? Is this the spark that, ignites them for a leg higher? Or is this a, one-hit wonder and then everybody goes back to buying value? So we'll have to see. That's on the board for today. There were a lot of good trading ops yesterday. I hope you got your share. If not, do a little recap for yourself so you can see where the error in your thinking might have been, and that'll help you improve for the next time around. Lay out your scenarios on your favorite trading vehicles, and then that way that game plan will be right in front of you when your alarm goes off or you get a visual cue from price as you're watching it, so you can react and work on your execution during the day. So if you're new here and you like what you've heard, Please hit the subscribe button and the alarm bell. That way you'll get all my video content notified of it in real time, so you can take advantage of it. Also, as I previously mentioned, look over in the show notes. You'll have you'll see links to both the blog site where you can look at those trades about to happen, and also a place to register for all my content, where you'll get an email each and every time I publish stuff. And if you do that, also you get an invite to the trading room. And for you longtime listeners, please help build the channel. Pass a link along to anybody in your trading circle that you think may benefit from the work. I'd really appreciate that. Try to get out there more. I truly believe that the levels will help a vast number of traders, and the more the merrier. Would love to have more traders join the group, join the chat room, and join the community. I think more is better. More ideas, more camaraderie, more people pulling in the same direction as aspiring traders to improve our process each and every day. So it's 8 o'clock now. Let me close the video and get it out to you. I hope you all have a good day of trading. If I see anything monumental midday, I will certainly do an update and send it your way. This has been Chris Buss with Traders Profit Compass. Talk to you next time.